What's up, everyone? How's it going? Welcome to today's market analysis and trade recap session. Unfortunately, today we did not wake up in time to actually stay live on the market, and that is because we came back from an event yesterday pretty late, and I'd rather be on the market when my mental capacity is at its fullest rather than when I'm tired, because that can make me result in some forced and impatient trades. So I'd rather just trade when I have that full rest and my mental capacity and I'm feeling good to trade. But today was not that day, and today's Monday as well, and you know how Mondays are. But it's right now 2:41 p.m. of that day in Central Time, so I did want to come here and analyze the market more early just so we can get prepared and set the day up for tomorrow as well. So let's dive straight into this market analysis. So as you know, let's go ahead and compare with our preferable outcomes. And looking at what happened, it looks like this white arrow down below actually seemed to happen. And that showed up on NQ as well. You can clearly see that. Let me zoom out real quick. You see that right around the time where market opened on Sunday, we gapped down pretty well. We swept the slower liquidity at the 4-hour demand zone, which means that this 4-hour demand zone has struck many times prior as well, stood. But what that also means is that this stayed strong and now we're heading back up, right? So it looks like we're staying within that range once again. The news did affect it right at market open, but it did not continue to affect it at the level that we expected. But that's fine. We had our preferable outcomes and we did know we wanted to either see a reaction here or up here, and that's exactly what we did. So it worked out to our favor. Right around market open, it was bearish, so that's completely okay. But what I want to do here today is see if there are any setups that occurred during that market open time in which we could have potentially taken. So let me go ahead and remove our preferable outcomes and see if there's anything that we could have potentially taken. And today, I will not be using Bookmap. Bookmap is a key tool, but I wanted to go ahead and see if we could find any setups by simply just taking advantage of footprint charts. Give me 1 second. There we go. Okay, so I removed my preferable outcomes. I'm going to do the same here on NQ on my other monitor. But let's go ahead and see. We already saw that the slower liquidity had been swept and this would have gone invalidated. So let's go on to 30-minute and see if there's anything else that we could have potentially noticed by that time. Right here, it would have been 8:30 right here. So let me mark a vertical line at that point. So it does seem like there was a demand zone at that level. It's not the best demand zone that I would like to mark out, but it is a demand zone. So we will go ahead and mark it out. But definitely there's going to be some 1-hour liquidity resting there and also resting down here. And also down here. And we also have these highs as well. Now going on to 30-minute, what we see happen is that right after market open, we actually continue moving up, take out this liquidity, and around that liquidity, we start making a move back down, aiming and striving to take down the lower liquidity level down there. Let's see what's there on the footprint chart that could have potentially allowed us to see and predict this to happen. Because if you notice, the entire market session here for today after 9 a.m. was bearish. So if we were going to catch something, it would have definitely been towards the sell side. And like we mentioned, we swept up our liquidity. We had that bearish bias because of the overall sentiment within the market. And we have lower liquidity and zones for price to actually target down below. So let's see if you can notice anything here at the top and potentially see if there's any V2 retracements that we could have taken advantage of as well. But this overall thing looks pretty choppy. Potentially this retracement, I'm gonna just mark out what I think might have absorption in which you could have took a sell-off. But I'm seeing this level right here. It's highly unlikely, but there's likely absorption up there. Come back up there. And then here. Potentially there. But those are going to be the 3 levels that I look for to see if there's any setup. Because from what I see, we're looking at a retracement setup or a reversal setup near the top somewhere here. So let's see how it looks on the footprint. Okay, so what I'm noticing already is that as we're coming up, we see lots of volume near the top of these candles, particularly with buy orders that are coming into the market with heavy strength. Now the next candle, sells do come, but buyers do defend, and volume is demonstrated here. So we know that this area is key level for price to work at because we're seeing volume here and also here. So this is an area where buyers and sellers may want to be at, or where buyers or sellers are actually fighting. So this potentially could be a place where there are passive buyers in the market, which sellers can bring price lower. So maybe buyers came back in there, but then they had gotten absorbed once again. Absorption, buyer absorption there, buyer absorption there, potential seller absorption there. We don't know that for sure. It's much more obvious in terms of buyer absorption simply because of that delta factor that we have. Now in the next candle, we do see large amounts of volume near the top. And in this, we're seeing both heavy selling delta with the point where there was the highest volume. Alongside the overall delta, the delta change being negative. The candle was green, the delta was negative, and the price did not close strongly towards the upside. What that is telling to me is that this may be a shifting point in terms of price, right? Because we have this divergence candle, we have this clear signal of absorption throughout these last few candles near the tops. And we've started to see sellers coming in with heavy aggression at this point. And if they can break this lower volume area down here at the lows, which I'm going to mark out with this box tool, then potentially we may be able to continue and reverse to the downside. So I want to see if sellers can break that area with strength and buyers struggle to push price higher. And honestly, you can see this clearly with the footprint, right? Let's take a look. Sellers, after this point, right? Sellers are coming in with heavy strength. Again, we're seeing volume distributed throughout this candle, but you could see that sellers are unable to push through this price. They come down here, buyers, they're unable to close down there. They wick there, and in the next candle, they push down once again. They break lower lows, but they're unable to close down at these lower lows. And we do see selling delta here at these lows, but with not too much volume to make it truly significant. We're seeing selling delta come in, but is unable to push through potential signals of absorption. So we're still going to stay flat for the time being. But if we keep moving forward, as we closed up here, we see in the next candle that sellers come in with heavy strength. Now, what I'm noticing also is that take a look at this candle right here. We're seeing large amounts of volume near the top with aggressive selling and potentially even aggressive buying. We know that this overall area is a very key point where price is transacting volume. So this potentially could tell us that there may have been selling barriers, passive sellers in the market that have been moving down in terms of price. And why do I say this? Let's take a look. Well, we're seeing, hold on, that was bad marking, but okay, give me 1 second, let me delete that. Okay, we're seeing large amounts of volume here, and buyers are unable to break through. This was their first signal of reversal. Then, what we saw happen was here as well. We're seeing large amounts of volume near the top, in which sellers are pushing through with heavy strength. This, it's not too obvious that there may have been buyer absorption, but where it gets kind of obvious is around this area. Look at what happened here. Large volume in this area of the candle. Now in the next candle, once we broke it through, we push up with heavy strength. But again, at this area at the top, we're seeing large amounts of volume around this area, right? Now, that could potentially mean that there are passive sellers here that are making buyers not be able to push higher. We're seeing large amounts of volume here, both buyers and sellers, but we're seeing aggressive selling occur at this area. We're seeing both aggressive and likely passive selling as well, simply by taking a look at this. And in the next candle, we're seeing that not much buyers are here at the top as well, and sellers are coming in with intense and aggressive intention. You can understand the aggressiveness because volume is relatively distributed throughout this candle, and delta is also relatively distributed, with majority clearly being in the seller side. That's a clear signal of seller delta, and this is the turning point where we really know that sellers are in control. But we still want to confirm this because we don't know if this may be a continuation, because you see this lower volume node that we have seen. What if that volume and what if that barrier actually extended until down here? We don't know that by simply looking at the footprint. That's where Bookmap comes in. But we see volume being transacted throughout this candle, lots of volume near these lows. So we're still going to be patient and we're still going to watch for a reaction. Now, we come up. Lots of volume at this level. Nothing telling us to short quite yet. But now, we come up again. Aggressive, decently aggressive buying that pushes up till there. But sellers come in quick and they push down quick as well. Until this area. But I'm still not in the trade. And this does get quite confusing at times because we're still not in the trade. Why are we not in the trade? Well, at this area down here, this was a previous area of high volume node where buyers did show up and push price up in terms of volume like this. Look at the big wick on this candle. We don't necessarily want to enter when there's such a big wick, right? Do you really want to take shorts right when you're at that level where you don't know if price is actually going to be able to push through? You likely would not. And we do see large amounts of volume there. Now we push through. And it is able, and because we've pushed through that area, price is able to continue falling towards the downside. And then here, it's likely that there was a heavy level of passive buyers here on Bookmap. Sellers got absorbed, intense aggressive buying came in, and there is where the longs came in. Now let's go ahead and do two things. Where was our previous area where we thought that passive buyers were? At this area, right? So let's go ahead and expand that. We expected passive buyers to move down from this level up here down to this level, simply using volume and delta analysis using footprint charts. And if we extend that, what we see objectively is that around that area, we're seeing lots of volume come in. And this does have distributed volume, but delta, buying delta is particularly distributed near the top. Same with this candle and same with this candle as well. Now, this is where the turning point may occur. take a look at this. Take a look at this candle. And take a look at delta. We are seeing large amounts of buying, but negative delta. Here, we're seeing selling, positive delta. That's showing us that potentially aggressive buyers are coming in, because typically when we see something like this, right? When we see such an aggressive buying candle that has negative delta, that means that buying is very aggressive at that area. But look at it. Buyers are aggressive but are unable to push through these highs. Same with this. We have a negative closing candle but a buying delta. That's showing us that buyers are aggressive at this area but are unable to push through these highs. That would likely be the turning point where you could have found an entry. If there was a Bookmap level here at these highs, and if we saw that spread, if we saw Bookmap barrier here, if we saw, let me mark it down. If we saw Bookmap here, that moved down in price until there, that stayed there, and then we moved back up into that level, and we saw such clear signs of absorption, and we saw aggressive selling start to occur, you could position yourself for a great entry. And if you were going to position yourself for entry, I would personally likely see where volume is being transacted to place your stop. So this candle would likely have been the moment where we're very keen and very confident in the shorts. Now, when we start to break through and close below this candle, since there isn't too much volume at this area, once we close at that area, around potentially this area, likely could have found an entry within this candle. And to be on the very conservative side of things, imagine we got an entry at the close of this candle with a stop above 6053. So this is going to be a pretty wide stop, I'm not going to lie. 6053.25, just to leave that one tick of space. You likely could have at least got a 1-to-1 or 1-to-3 risk to reward with high confidence with a very high Sharpe ratio. This move is instant and aggressive within 10 minutes itself, or within 5 minutes realistically. And if there was such buying barriers up at this level that converted from here, as you can see that volume area is holding price down, you could have likely stayed in this trade. And if you stayed in this trade, let's see, I'm trying to look for signals where we are seeing buyer absorption or price potentially stalling. And where I see that is actually aggressive again. Breakthrough, but then this potentially likely here because I'm not liking the wick on that candle. And this would have been 11 a.m. So realistically, if we stayed until 11 a.m. and got out at the top wick of this candle, being conservative once again, it's a 1.73 risk to reward. But if you saw that occurring, you likely would have entered or exited somewhere around there. Position yourself to a 1.5 to 2 risk to reward, which is really excellent in current market conditions. And that would have likely been the only high quality A tier setup, A plus tier setup that I would have noticed. Now, it's highly unlikely we stay in the trade until 11. 10:30 is much more realistic amount. And if that was the case, let's see about this buying candle right here. We're seeing aggressive buying come in there. Potentially we could have found an exit somewhere around that area. But if we're in a selling barrier above, likely would have stayed in. Maybe taking the extra 30 minutes out of our day. But maybe there. Let's be very conservative. I would have positioned at right around a 1.8 to 9 risk to reward, which is pretty excellent. And with the fact that we could have moved our stops down very immediately in terms of the trade, risk is managed very well, stop is managed very well, and this trade overall would have been very well. And that's honestly just highlighting the power of order flow. Now guys, I'm not even using Bookmap. I'm just using footprint charts to show you the power of order flow, right? We saw volume and delta, and let me explain to you once again what delta is. Now, on each level, there are a certain amount of buyers and sellers that get executed. Delta is essentially the difference between buyers and sellers. So if the delta is positive, that means there are more buyers at that certain level than sellers. If it's negative, more sellers than buyers. And by understanding that delta at certain levels, we know that at a certain level, there are a lot more aggressive selling in the market as compared to buying. And if we understand that and use that in unison with volume and actual passive orders that we can see using Bookmap, then you have gained a really good edge if you can adapt it to your strategy properly. Now this trade right here is only used and only given using the footprint charts. I honestly did not mark anything else. I mean, we would have had additional confluence because this is likely around the V2 level. And as you can see, where did that retracement happen? Right at our V2 level. So what this is it's a reversal play and a retracement play if you look on the higher time frame. And when confluences match so well like this trade, you are likely in to reap the rewards of such trade. So that's the beauty of trading. If you can use all your tools in unison to make some really nice plays, you should do fine. But that's the only good trade that I see for today, simply using volumetric analysis alongside delta without even Bookmap. If we had Bookmap, we could further validate such trade like this and potentially even find an entry closer to the top right there. But even with the footprint, we could have got an entry such there that works with our strategy, which would have positioned us for a really good trade here today. Now, that's honestly all I have here for today. Likely would have been a pretty good day here to trade here today. That did not make sense, but it would have likely been a pretty good day if we had traded today with a good mindset, looking in hindsight. But again, that's in hindsight. Let's work on the future. So, once again, getting ready for later, our preferable outcomes did work out pretty well. We saw our not expected but did understandable. Okay, I'm tripping. I'm gonna get off the charts really quickly, but we did see that one of our preferable outcomes did occur coming from that lower liquidity level, which would have set us up for the day and which likely would have set us up for a great trade here using actual insight into the market and understanding the market in terms of an auction and how its mechanics actually work. Now, I don't know if I was tripping in these last 5 minutes when I was speaking, but that's all I have here for today. I hope you guys gained a thing or two out of this analysis for the market, for our market session, and how we built up a setup here for today. If you gained a thing or two out of it, please feel free to subscribe, leave a comment down below, like, do all of that. And if you have any questions, please feel free to join the Discord. The link is in the description down below. You can gain a thing or two out of it, all for completely free. Additionally, if you want to take advantage and start practicing using footprint charts like this, take a look at the link in the description below as well. It is completely free. Everything which I did here in this video using Orderflow is completely free. Now, it's free because there is a 15-minute delay, but when you're starting, you want to start practicing using past data. You don't want to get into live right away. And by taking advantage of these Addis charts, which is the official partner of the channel, you can get started with Orderflow today. So I highly recommend you guys to check that out. But again, that's all I have here for today. I'll see you guys later today for the pre-day analysis of tomorrow. And I guess I'll see you guys then. Goodbye.